when it comes to the point of view, where do you invest in all of this? Which are the sectors you're looking at? You, for example, I see are still invested in some, there's also physical infrastructure being built, and many people would say that that's the place to be. In defense, I see you've got positions in a lot of defense companies, which is again another area. These are not either of those trends, but this is another thing which is happening, which is the building of some amount of physical capabilities as well.
The key in the stock market is you got to invest at the right price, buy it cheap. So the physical, the defense and the railways. See, the government of India is leading the capex drive. And the sharp edge, the blunt edge of the capex drive is they're expressing it through the railways and through the defense companies. That's how the government does it, through road building, right? So these companies were listed and they were a very attractive price. So it didn't matter whether it was physical or virtual infrastructure, they were just cheap. So we bought those. But to give you an idea of something more forward-looking that we're thinking of, a lot of governments, including India, set a very strong ambition of carbon-free, zero carbon by 2050, 2040, things like that. The opposite of fossil fuels is, of course, electricity. So there'll be a huge surge in electricity out there. And two things that would stand out are copper, which is almost like a required material or metal for electrification. And of course, the infrastructure build out. Who builds the transformers, the gears, the connectors to all this. So one other theme, other than what you could look at in terms of the physical defense and railway infrastructure, would be, for example, electrification. And there are a number of ways that you want to play that theme. And I think it will become very prominent. I mean, India has very limited amount of capacity in copper. There are only a few companies doing that. And so the good way to express yourself is to buy perhaps those companies.
And the demographic theme, because it doesn't, should we sit down for a minute?
Sure.
It's nice here, yeah. So the infrastructure theme, the demographic theme would be what, FMCGs?
Yeah, I mean, demographic themes plays out in different ways. It plays out in more housing, more savings, more banking, more education, more travel. So generally the consumer economy will tend to do well. These, of course, have been slightly slow growth places in the last few years. But I think as, I was from your hometown, Delhi, a few weeks ago, and we met some very interesting companies that are trying to reach to the last mile of Indian villages, the one that everyone ignored and could not be connected. They're using innovative digital apps. So my feeling is that that part of the app economy will also do well.
Now let's look at the bear case. What could go wrong? Social unrest, is that what could go wrong? Political instability, Indians fighting with Indians,
I think
people getting shot on television.
I mean, social unrest is actually more likely to happen into our great Asian rival, China, because, well, everything seems calm on the surface out there. Sometimes it's a cauldron underneath it. While India, everything seems disorganized and disoriented in the surface, underneath the country moves on. And I think the country will move on. It has a democracy. People vote. People elect the government and people accept the government. I mean, you had, I think, 600 million people vote in the last election. 90 million of them were first-time women voters. These are the aspirational class. And that is going to make a strong statement that good politics makes for good economics also.
All right, so last word, if you have to tell anybody what they should do with their money and where they should be investing it, by the way, in the sector.
My first hypothesis, which I've always been saying, is remain invested. That's the first thing you need to do. I think we are at the right place at the right time in history, and I think this generation of India, born after 1991, has a chance to go down as what we call the proverbial greatest generation, because the economic opportunity, we're becoming the center of the universe in a manner of speaking because of our demographics, and because of our digitization, we first time have the skill sets to compete with the best in the world. So my great advice is to remain invested, buy great quality companies, and hopefully you'll see me back when the index crosses 6 figures.
We'll be back talking to you, well, long before 6 figures. We're not going to let you get away that easily, Ramesh. We'll keep coming back with you to touch base on how things are going. And therefore use every dip as a chance to buy. Would that be also your advice?
Definitely don't use every tip as a buy to buy. Find great businesses which have great cash flows and remain invested in the business with a conviction. As Warren Buffett taught us, that a stock is not a price that moves up and down. If you made 20 bucks, it's not necessarily a good stock. But you buy a piece of the business and spend some time doing it. And if you can't do it, if you cannot, for example, buy individual stocks, you don't have the time, don't have the inclination, buy an index fund and you'll ride the prosperity along with the Sensex.
All right, so there you've got it. That's how you can take advantage of this India story that we've been talking about at great length. You can actually take part in it. You just buy good companies and ride them for a long period of time. Thank you so much, Ramesh. Always
Thank
a
you,
pleasure.
Vikram.
talking to
Always a pleasure.
Thank you.